All right, ladies and gentlemen, welcome back to the Simcast. It has been quite a while, and it is fitting to have our first guest back on the show as JTrader, one of my favorite guys in the trading world. Just a great guy, doing a lot for traders out there, and actually has I guess you could call it a world tour, but it's a USA tour that's coming up soon, and Tradingsim is happy to partner with Jay on that. A lot of exciting things going on in his family. He's got a new baby coming along, got a new academy he's building. So Jay, welcome back to the show, man. It's great to have you back.
Thank you, John. It's always a pleasure to be over here with you, with Tradingsim, and with all the guys, the traders that will listen to the podcast. I prepared for today a little bit of exciting stuff, and we're the starting of 2024. The last couple of months, I've been tracking a lot of patterns of traps, where I would say the smart money, or you can call it big hands, they try to trap traders, and both long and short. And we'll see some examples on small caps, on big caps as well, how they trap. So I would say that these examples will be very useful for not only beginner traders, but also for advanced traders, because when you start knowing and learning how big hands trap and manipulate the market, you can take this to your advantage. So if you
Fantastic.
want, we can start, and I will share my screen.
Let's jump in there. I'm looking forward to this.
So the smart money trap, I wanted to call it like that because this is exactly what it's happening in the market right now. And I believe the more we'll have the algorithms working, so all these hedge funds that are quants, so they use algorithmic trading and high frequency trading, we'll see more traps. Uh, Investors, traders better, have to be very knowledgeable nowadays. It's not anymore trading a breakout or a breakdown or buying a break of the VWAP that you will make money. Sometimes will work, but remember that there institutions that are simply studying the market, and they're studying the psychology and the behavior of the investor. So if they know that everybody's going to break out a level, so they're waiting for the breakout, and they know that they know that traders will simply jump in. What are they going to do? If they have an agenda, if they have the liquidity, if they have the capability to do that, they will do their trap. So maybe they already have a pretty big portion, and they will look for a simply fake breakout. So they will look for a breakout, they will fake it out, means that they will start selling on this new created liquidity. And over here, we simply want to go now looking at some examples so that it will be pretty clear for you. So the
Awesome.
first thing that I want to cover here is the fake breakdown and how it happens. BNZI is a stock that we had at the end of the year, 2023. The news was Banzai executes law to acquire top-rated lead generation platform. We have a stock with a very tiny float, so we're talking about small market cap. We have around 20 million. We have also over here 3 million flow, so we're talking about really a micro float. Institutional is pretty high, 35% being a small cap. And we have SSR on, so short sale restriction. Few things to say about the small caps. By tracking all the small caps since 2017, since I started trading small caps, since 2017, gaps above 30%, John, with at least 1 million volume traded on the day and a market cap below 700 million. Well, 71% faded on day one, or at least we can say better. They closed below the open level. This doesn't mean that they won't extend maybe 20, 30, 40% before fading. But the point is that 3 out of 4, they tend to close right on the day. So this means that if we are like bull traders and we try to trade small caps in the long term, we're going to be losers if we don't have a strategy.
Okay. Now,
And
is that on the first day that they run? Or
the
does it?
first day that they run,
Okay.
71% close right on the day.
Gotcha.
And then I wanted to look at the difference between 2023 with, for example, 2020, which was a bull year. It was a year that was pretty strong. We had a lot of small cap traders. We had also COVID. So people were at home. They become like, part-time trader. They wanted to study. And we had a lot of volume. What changes is not really the percentage of faders 2023 versus 2020. They're almost the same. 2020, we have 73% faders on day one.
Mm-hmm.
And 2023, we have 71. So almost there. What changes is the amount of volume. Volume that was around 10 million average per stock more in 2020 versus 2023.
So a little more liquidity back then. Everybody
Exactly.
putting their
Exactly.
their COVID checks to work.
I give you just some numbers. An amount of, we say, gappers above 30% in 2023 with at least 1 million volume. We're still talking about more than 400 gappers. So it's still a market that has some very good opportunities. So let's get into the manipulation. So for who doesn't know, manipulation was before 2005, 2006, more made by market makers. So when I was trading Italian market and covered warrants, I still remember that there were market makers from Deutsche Bank, Società Generale, Unicredit, and all of these big firms that actually had a person over there. Since 2006, 2007, 2008, we had more the, I would say, switch from the person to the algorithms. And the more we're going into 2024, 2025 and on, I believe the more algorithms, so the more like we say automatic system will work in the market.
Mm-hmm.
And over here we see one of these early runners in the morning. So we can see that over here we start 8:30, the news pops out. SSR is also one of those, I would say, red flags to short, because SSR means short sale restriction. So you cannot directly short on the bid.
Mm-hmm.
And they have a float, very, very small, 3 million. So only 3 million over here, and you can rotate the float. And we found that SSR, high volume, micro float, with the news, they tend really to run. So for who's out there, you will see, if you start tracking this, a lot of these runners in the morning or midday, they have the same stats or very similar parameters.
Okay.
So what I like over here, Jay, is that often we see the first push, and then we start looking for a fail. And on this fail of the VWAP, we will see early short seller jumping in. But instead, we always need to wait for a lower high in order to trade. And we have to look for a pattern of fake breakout or stuff. Otherwise, if we trade weakness, so we start shorting weakness, we're going to have generally big losses. In this case, what do we have over here? We have a pattern of wedge, and we start looking for this consolidation, and we start having a breakout. Now, this is a level where I will really like to buy the breakout, and we'll see after how we execute it, because you're buying a consolidation, and you're not buying the high over here, but instead you're still buying a relative low risk entry near the VWAP, which is this red line. And the things that you have to monitor over here are the volume, are the sequence of higher lows and higher highs, and really the prints. So I start looking at the tape. Generally, it's a tape where I have a little bit of filters. So at times in sales where at least I look for 5,000, or on very liquid stocks, maybe like $1 stocks, I start looking for a filter of minimum 10,000 shares. So that the more I see these block passing, the more I know that buyers are in control. So demand is in control. And we can see that they start really moving up over here, because we go from a $180, $190 over here. This is already $280. So it's $1 in about 20, 30 minutes over here. So we're talking about 30, 40, 50% of move in about 1 hour. That's not a bad move over here. Actually, from this low to this high, we go more than 100%. But what I would like that traders, over here, just start tracking, okay? Start looking for how they trap. So everybody is going to look or to buy breakouts. And in this case, if you're a retailer, don't buy breakouts. That's what I want to tell you, because you will lose money and you will end up writing to me or John and saying, hey, I'm trading small caps. Every time I buy breakouts, I get stuff. And it's true. You don't have to buy breakouts. The best thing is to wait for a breakdown of a support, like in this case, so you can see that you break the VWAP. And then if we start reclaiming the VWAP and we have like a cup pattern, generally between 9:45 and 11 o'clock, we have this cup and handle pattern. And that's the moment where you want to buy.
Is
So
this kind of like this cup and handle right here you've got?
exactly,
Okay.
exactly. The point for me is that once we see the shorts that are trapped below the VWAP, and then we reclaim that VWAP and we start making a higher low, I look for prints coming in. Again, buyers in control. I start looking at the volume below over here rising, and then I can take a relative low risk entry. And this is very key that we look for this between 9:45 and 11 o'clock.
And
And how
why is
they,
that important? Why is the timing important there?
because they need the first 15, 20 minutes to trap over here the retailers on a fake
Okay,
breakdown. Because over here, it could even happen that this fails.
got it.
Nobody tells it that it's not going to fail. But if we have this pattern,
Hmm.
well, then be ready that it's going to be a trap.
Fair enough. Yeah, and so just kind of like observationally here, it looks like you've got a nice you kind of undercut this this low from the market open where it comes down and then and then once it reclaims that area, dips below it here, like the trap you were talking about.
Exactly.
And then we got a nice, it looks like this little retest right here is on low volume. So
Mm-hmm.
almost like supply kind of dried up on the retest of that level, which is to me indicative of a lack of selling coming in. And so that might be where, my ears would kind of turn back up and say, okay, we retested this breakdown on low volume, and then I would be like you're saying, expecting something to happen over here where you have this arrow. Like, do we do we reclaim this with a cup and handle, and then does the volume pick back up, and those sellers, do they start giving up their shares for their short selling shares, capitulating there?
Exactly. Exactly. But they don't, the big hands over here, they have an agenda. So generally, this agenda is to raise money through an offering. So they have dilution on, and they could have, an S1, or they could have an S3 or warrants or ATMs or the market offering. And they need, generally, because they have a lack of cash, okay, they need to raise money in order to continue with their like tests. Maybe a new biotech company is making a new drug, and they want to raise money. And in order to raise money, they need to dump shares. And of course, they won't dump shares down here. If they can, if they find a kind of manipulation like this where they can trap shorts and push them higher over here, because over here, I believe that some shorts will simply start adding, they may look for this huge amount of liquidity created again, breakout, to start dumping. And then over here, what we have? We have a new bull trap. So over here, we find a bear trap. And over here, we have a bull trap. And that's the reason why, again, we say, don't start buying traders breakouts, because often these breakouts won't work. You have to buy dips, like you buy this dip over here, you start buying this dip over here. And once you have instead these levels, if you're long, start to trim out, start to sell partial. And if then we have a pattern like this, where we see a fake breakout, this is a major stuff. I like to call it J Slam because it's a particular formation of 3-4 bars, very narrow. And then we have a push, and then right away a big dump with a huge amount of volume over here. So in this case, you can see the big selling pressure. And that's the first, I would say, candle that tells us, okay, over here, somebody dumped hard. So sold a huge amount of shares. We're talking on this bar. This is a 1-minute chart. We're talking about almost 1.3, 1.4 million trade on that bar. And then still, don't start shorting over here. Wait to see what the market is doing. Are we doing higher lows and higher highs, or we're doing a push, so we're staying below this resistance, and we start forming lower highs, lower lows? This is a consolidation that once I start seeing this after a bull trap over here of the day, then I'm looking for that unwind.
It's beautiful.
And I want to share over here, Jay, how we traded this. So that shift of bias. This example was shared while we were trading the day. You can see over here the timestamps. So we long on that formation that we were seeing before. And then we took some profit, and over here, we start taking the first short after the open on a fake breakout, looking for dips. The trade over here didn't work because you can see that it started to climb again. And that's the reason why we got out entirely over here. We tried then a long, didn't work out right away. And once we start seeing that breakout, so over here, and this was around 1039, 1040 over here, we see 1039, 439, setting up for a short. And then we're looking to sell over here at 340. Why this? Again, that fake breakout, that bull trap. Now, this is a skilled trader, so it's not a beginner trader. So started to short over here, more profits, and then all the way down. And this is what the market is doing. Now, if you think we were, let's say, simply retailers, we would probably wait the gate and buy the breakout over here, 930.
Mm-hmm.
And then once we see, for example, this level, we will stop out, maybe go short, and then get trapped again. So it's very important to learn this type of manipulation.
Well, it's a great example of what I would, just call that early trading day. Once the bell opens, just a nice bear trap, and then almost 30 minutes to an hour later, a bull trap.
Exactly.
Just picture perfect.
That's the reason why small caps are very tough to trade. I mean, they're very remunerative because unless you trade options, there's no big cap that will go from $2 up till 3.6 in about 2 hours. So the return in terms of percentage is really, really crazy. The point is, you really have to be skilled and have in your mind multiple scenarios already that you've seen over and over and over. So tracking a lot of scenarios so that you don't get stuck simply long, because over here, you can take the best long of the world, but if you don't know over here that this is going to be a reversal and you're probably going to hold, maybe you end up the day even red. So right. Very important for this. Another example of how big hands trap retailers on day two. And this, I would say, is a setup that is the same since 2017. So since I started tracking small caps, the first thing is, again, look on day one what happens. We have a stock with 28 million float, low cash, and we have a dilution. In this case, it's the market offering. This means that the company can dump in order to raise money whenever they want without have to price the offering. It's not like a warrant they have to exercise a certain price. It's not like an S3 they have to have a prospectus with the price of the offering. They can dump anytime. And the same example we saw before, this is OMGA, I think like 2 weeks ago, we have a morning fake breakdown. You can see the support. Mm-hmm. And once we have this fake breakdown, they start reclaiming the VWAP and they push it. And again, over here, we have another spike. This often is a bull trap. same exact example we saw before, and then they start like being sideways all day. Now, what I want you to focus on is in day two. This is a setup that we're leaving over here, John, for who is gonna watch this. A very good, I would say, strategy. Start looking what is the highest volume traded level, so the point of control of this day one. And over here, we see this red line. This is the point of control. We have also a high volume node, so HVN over here, and then a low VN and a low VN. So this area is the area where we have the majority of the volume. Once we start in the morning and opens over here, and it tries to push, it's like if we have a major resistance just above. So this level, it's a major resistance. So every single time that somebody over here tries to buy, we will start seeing sellers jumping in. It's simply a physiological setup that has been like this in the last 6, now 7 years. If the volume over here is weak, I wait for a stuff. I wait for seeing sellers. I wait for a resistance. I start looking order flow. In this case, we can start like looking for a short. But in order to avoid traps, I always wait that we have a breakdown, and then I'm looking for a first rejection of that level, because I don't want to buy, sorry, I don't want to short the breakdown like over here. I short a breakdown, okay, I'm in, earn maybe 10 cents, boom, I get trapped, I lose like enough over here to have a very bad day. I short the breakout? No, I wait, and then I start waiting for pops. If these levels over here, if these pops cannot reclaim that previous support, it's also a very important fib level, 61.8%, then I'm not sure 100% because we're always trading, everything is possible, but we have like more than 70% by stats that this will close right on the day. And this is exactly, so what I'm looking for that plan, high volume day of day one, shorting below that, after a breakdown, waiting for a rejection, and ideally, if I have a fib level or something else can add more conviction, like an order flow to my plan, I'm looking for that short.
That's really nice. Yeah, and so just the first day there was the high liquidity day, right? You get the bear trap, the bull trap. They're trying to offload their shares, and then what you're looking to play is that second morning of the failed continuation. So if it doesn't continue up the second day, you're looking to play that breakdown.
Exactly.
Nice. And how is it that you found your levels there? Was it just the Fibonacci level, or was it just the that key bear trap level from the day before where you want to play that?
Exactly. So I believe in a concept that is confluence of signals to add odds. If we have only one signal, let's say we have 20% in our favor. But if I start adding signals to my plan, then I have more percentage of odds that I will be succeeding in the setup. One is the fact that we had the bear trap. So that's a very important key area because I know that that level has still like some kind of impact, some memory over here.
Mm-hmm.
Then I have the fib. So we have a second signal. And then also I have the support because over here we held, we held, we held. So
Right.
if now we break that level of demand and that demand becomes supply, that's my third signal. Plus, we can look at the VWAP, we can look at the order flow. So I can get 4 to 5 signals to tell me that's going to be a good short. Again, I always have to look at the volume because anytime, they can start holding maybe this level over here and start propping in this maybe halts and close above $6.
Mm-hmm.
But until I see this lower high, lower low, low volume, day two or day three are generally, when we have this setup, fading this way.
And you like that level better than you like, say, the pre-market breakdown just above it. You'd rather see this key level from the prior day because you think that's more important.
Correct. It's a multi-day level So for me, it has more validity.
Oh, cool.
And over here, this is execution from a trader in the room, exactly looking for that. In this case, we have a 5-minute chart. So we're looking for a breakdown. He looked over here for the pops, putting a stop above, and then looking for the unwind.
Nice.
One more example over here about VWAP. I think we spoke about VWAP a lot of times. And I would say that smart money, they know exactly how to trap around the VWAP. Now, generally, traders would look for a breakout of the VWAP to long, breakdown of the VWAP to short. But I want to show you how we had a shift, and this like 10 days ago, more or less, on Tesla. So talking about big caps on the VWAP and how they like to trap in the morning. So over here we had Tesla. First of all, Tesla was in downtrend. So downtrend the last 3 days. And this was the this was the 3rd of January 2024. Pre-market, we have a very tight range. So it's not really over here extending. It's moving in 1.5 points. So very narrow trading range. What I like to do, John, in the morning is always trace my levels. So daily resistance, looking for point of control of the week, looking for also the pre-market high, pre-market low. And if I see that we have a trading range, I generally look to trade out of that trading range, not in the middle, or I'm looking to trade extreme. So for example, I'm never going to buy over here this level. So this level up here as a breakout, and I will look instead to short this level over here. I will never look to short this level over here. I will buy more this level. So I'm looking always at bear traps and bull trap because that's how big hands like to behave and like to trap retailers. So the first thing is that we open over here 930. This has a instant flush, so a washout, dip into pre-market support, and then right away it start bouncing back up. At this point, we think, okay, this is a washout, so they faked over here a breakdown. Let's take a long. And that's a good idea. But we will see how this instead doesn't work and how you have to react so fast if you trade in the first 5 minutes. That's the reason why also I invite beginners not to trade the first few minutes, maybe wait the first 10 to 15 minutes to see how the market is behaving, if we are like trending or sideways range. Because if you're not fast, skilled, and well prepared, generally the open is a very tough beast to manage. We had a push over here into the key level. And if you're long over here, now you're waiting for this higher lows and higher highs, or at least a breakout, consolidation, and push. It doesn't happen. And over here, we see on bounce from support, big hands try to hold and show a long opportunity. The fact over here is that instead of seeing that breakout, we see right away the price going from green to red again. Mm-hmm. So long. Over here, we have to change our bias to now to short. And all of this is a major rounded cup. So we can see this, the rounded cup. Now over here is where the reversal confirms, because it can even happen that we go down here and bounce up again. But once over here it breaks down and we start having this consolidation, just like we saw before on that day 2. So you wait for the breakdown, you wait for a consolidation, and then this is a clear confirmation that we're not anymore stuck in our range. On a breakdown, you take the first pullback, and now you're looking to short. Few things to say over here. Volume. When you have this breakdown and all these candles are with increasing volume, means increasing selling pressure. It's not like the example that, for example, you said before, it's unwinding, but the volume is decreasing, showing that there are no sellers. Over here, we have really a lot of sellers because each time that they start like dumping, the volume is increasing. The volume is increasing. And this means that once we broke the support, everybody over here is on the really is on in their way to start selling pops. This is something that I saw on Tesla, on Nvidia, on the Qs, on SPY. So a very, I would say, actual pattern. And this is, for example, what is how you should be trading it.
Wow.
That's the long. And over here, if you're not skilled enough, you will simply stay in and maybe stop down here. Instead of here, there's a reversal. So shift long to short, and then you can start simply trading all the way down. I would say the best is wait for the breakdown
Hmm.
and then start selling after the first consolidation. Over here, the trader uh, is very skilled. I like the play. This is more advanced, but you want to stay like comfortable, wait the trend line break, in this case, a range breakdown, and
Hmm.
start shorting pops if you have no reclaim over here of VWAP. And in this case, on the 1 minute, we're staying below a 9 EMA. You can see this line over here. I mean, this is fantastic.
Yeah, that is a beautiful downtrend. So I'm just looking there. It looks like, you've got a nice little confirmation of, just kind of a mini bull trap there.
Yeah,
Then, and that's what you're talking about, just kind of reverses your bias to the downside. Is that right?
exactly.
Yeah.
But it's very tough because, first they tell you, okay, we're going down at the gate, so let's short it. And then, boom, they bounce it back up, so you're long in it. And then you have to change bias a third time. And that's the reason why, if traders don't know this kind of manipulation, they get stuck. The trade maybe goes down. They were shorted open. Then they get stopped. They get
Mhm.
frustrated. And the stock instead goes down maybe 10 points. And they said, oh, I was short. I just have held it.
Yeah. Well, talk maybe, if you don't mind, just a minute or two about like the psychology of that. Like, because I know a lot of new traders, it's difficult for them to shift their mindset,
Yeah.
especially that quickly.
Yeah, exactly. So the first thing I would say is in order to improve the price action recognition, there are three tools that I love. The first thing is for me, every single day, no matter if you trade or not, and I'm talking serious traders, uh, I would invite everybody to annotate your chart. For example, you take a chart and you start putting what was the setup, where you had to enter, where you had to stop out, how you had to trail. Of course, you'll tell me, Jay, it's such a stupid thing because 2020, everybody knows how to do it. But the more you do this, the more you imprint in your mind, how is the correct setup? It's like you have to go to a soccer game. And I used to play soccer when I was very, very small. So, calcio. And the coach would always give us the plan, the tactic, and then you have to trade it. You have to play and put that tactic in action. What else you need when the coach gives you that tactic? You need to train a lot. And for me, training is retrading. So I had a lot of mentoring traders during 2023. And I made really two different groups. One was retrading almost every day, and we used Tradingsim.
Mhm.
And the other group was not retrading at all. I mean, the group that started retrading did so much more improvements in a shorter time. Why? Because if I look now, Jay, this stock over here in Tesla, there will be other days during the year that maybe Tesla, Nvidia, SPY, Qs will do the same exact setup. If I trade it one time, what kind of confidence I have it? Yes, I can study maybe 2 hours this today. In 6 months, I won't remember. But if I start like every single time that I have this setup, track it and retrade it, even 5, 6 times in a day. In 2 weeks, we have the same setup, retrade it. Other 2 weeks, we have the same setup, retrade it. You start really making become this thing part of your memory. It's
Mhm.
something like you do every day. I have a coffee every morning. I have to, I would say, do my work at every morning. I go in automatic mode. The same thing has to be trading. If you see this and you know that you can shift bias from long to long again, or to short again, and that it's happening. So recognize these traps. If you retrade it, you gain that muscle memory, in this case, so the brain memory, that will help you when you're trading live. And the third part is also record what you're doing. So record your screen and look and talk when you're watching your recording and be critic to yourself. Why did I trade over here? A lot of times when I do errors, I listen to myself and I talk to myself looking at what I traded in, and I say, what I was doing, I was really like a dummy. Like there was nothing over here to short, and maybe I shorted, like, and then 2020, yeah, I knew it. That was not a short, but you have to do this kind of job. These are three fundamental tools that will help you in trading: annotation, retrading, and then also rewatching your recorded session.
It's
You have
fantastic.
something more to add over here, Jay?
No, I think you hit the nail on the head. I think that especially, retraining, just review that whole process is really powerful. Um, I think for me, because I can still get stuck in that mindset of, well, I want this to go a certain way. So if I'm taking the long position, it takes time, and honestly, maybe it just takes the experience of losing and getting stopped out to so many times that you're like, you know what? Maybe I should not marry my idea,
Yeah.
and I should have the foresight to see different scenarios play out. Okay, so if I take this long, if this happens, then I'm good. But if this happens, then that should completely change my mindset. So I want to have like a couple of different scenarios over here that if it plays out that way, then I need to adjust my thinking instead of marrying the position that I wanted to take and trying to force that, like a square peg into a round hole. It's just not happening. So, staying like you're saying, like staying flexible in the moment and taking the information and then adjusting whatever it is that you've made. So if you're long, but then you get that nice little bull trap, you got to take that information. Otherwise, like you're saying, you're just being a dummy.
You covered a
And I
very,
know because I've been a dummy so many times.
everybody but is it. And even if, you become consistent and profitable, you still do, uh, there still will be days where you can call me a dummy because everybody does mistakes any moment of life. The only thing is that when you are more, I would say, advanced, where you have more experience, you can simply recognize faster that you're doing an error.
Now your wife's not over there shaking her head, is she?
She has over here the headset, so she's listening. It's better. So we can go to the last one. I would say that this is also um, a good example. So if you have more administrators over here, this is what I wanted to share with you. And doesn't really happen only in small caps. It happens also in big caps. I've seen this on Baba lately. I've seen this on Futu 2, 3 days after the earnings. So SNGX in this case is a small caps. But again, this pattern you can find on many different assets. The fact over here is that we have a stock again with SSR. We have a stock with 10 million float. And you can read the news down here. It says simply, SolidX announces publication demonstrating complete protection against disease in non-human private models of Ebola Marburg viruses. So I don't even know what I read, but the point is that they will try to make it sound complicated for you. And every single time they try to get the news to, I would say, invite you to buy, just like explain if this is the best, like news, innovation, or discover ever made. Two things to see: bear trap again and bull trap again. So we're not simply showing today's examples where, they're pretty easy, buy this, short that. I'm just over here with John today to explain you what the market is doing and the setup that you can look and recognize yourself. You start tracking. Doesn't mean that from tomorrow you go trade this. No, you have to track it. Just study the market. And over here, I just want to go over again pre-market support and key dollar level of $1. There are many psychological reasons why traders would like to short a $1, $2, $3, $250 on Tesla, for example, 400 on Nvidia, and so on, because those are psychological numbers. Everybody likes the feel of $1, $5, $400. But if you think that big hands know this, and they will know that, or you stop out, let's say you're long and you're going to stop out, or that you're going to short because you know that that's a key level and you think it's going to break down from there, what they're going to do, they're going to do the opposite of what you think because they know you. So being that there's artificial intelligence right now behind these algorithms, don't you think that they will like observe how the retailer is thinking and use that to their advantage to make money for their firms? Exactly. So if you see something like this, start thinking again, do we have buyers or sellers in control? Look at the volume over here increasing already in these true candles. And you can see that we have a freight breakdown and right away you close above. That's very, very strong. It's a powerful entry setup. Again, over here, what happens? We have a bull trap, but only 2020, we know that this is a bull trap because maybe this could have dipped over here and pushed back up. So if you remember before, we said one thing, never short the front side. Always wait for a peak. In this case, has to be a kind of trap. So you see that fake out. You see that longs over here are trapped above a key technical resistance. And once you see the breakdown, wait for the lower high. The same setup that we had on BNZI, the first, I think, chart that we shared, we had over here. Over there, it was above the pre-market high. Over here is below the pre-market high, but it's a breakout of an intraday level. And once we form this, which is also, you can see bearish engulfing, then you wait for that lower high. If this lower high over here has no volume, and you can see once we break the VWAP over here, look, that selling pressure that is increasing. That means we have sellers now ready. All these longs that bought over here above 112, they will stop out when? On this breakdown over here. And this is powerful. Again, not only in small caps, but on big caps as well, mid caps. It happens very, very often. You think you found a bear trap, okay, or the bull trap now are going to run. Instead, you have a double bull trap or bear trap, and it's going to reverse again. And that's why market 2024 is highly remunerative, but is also highly competitive. And the reason that you have to educate yourself, you have to study, you have to improve. So there are like really techniques behind that you have to learn.
That's awesome, Jay. Yeah, and you know what I love about these plays is that as a new trader, you often you think you have to time the top, you know,
Mhm.
but you don't have to do that. I mean, as you've shown right here, you know, you've got those key levels, and then your entry that you're saying is on that retest where, um, you know, where those pops are getting sold into. And so you don't have to, you didn't miss the move if you didn't get involved up here somewhere. You know, that's really just like the confirmation that, okay, maybe it's a change of character. And so if we come back into this trading zone, then it's really it's kind of a low risk and it's a lot less, I guess, violent entry, you know, to be able to get involved in these little pops that you're talking about here. So especially for beginner traders, you know, just let it play out. And it sounds like you know, these things are really showing up in the market here lately.
Exactly, exactly. Well, Jay, these were the examples over here. So I think that we cover some good stuff. If you let me, I want to give to we say the people over here that are following us, the traders that are following us today, 20% off chat room subscription, code TradeSim20. You can check the JTrader code / chat room. And also the last thing over here that I want to bring up is the seminar we're going to have in the States. They're going to be the link in the description. This is going to be a 3 days event in New York, first, second, and third. Also, we're going to be attending the opening bell at the New York Stock Exchange with amazing partners like Tradingsim. We're also going to be in Colorado the first 3 days. Going to be 3 days of live mentoring. You're going to dive in the markets with me. There are going to be also lessons. I'm going to share you my strategies. We're going to look what is the homework that you have to do on your own when you go back home. So like the retraining annotation, all of this together. And I mean, I'm waiting you over there. So join us and you will see yourself.
That sounds amazing. So basically, they're going to be like 3 day master classes with the master himself, huh?
Exactly.
That's
Exactly.
fantastic. Yeah, and I would definitely encourage anybody, try to make it out there. Jay is an amazing mentor. Take advantage of that 20% off. I've been in his room before. I know just how valuable the information there is, and honestly, especially if you're starting out, you need that. You need that mentorship. You need somebody who's been there, done that, to be able to tell you, this is how it works. So, Jay, it's been amazing as
Thank you very
always.
much, John. And thank you, Trading Sim. Thank you, everybody, for watching this. I hope it's going to be useful for you. Uh, if you have questions, reach out to me or John. You can find us on social, Twitter. You can send an email. Jay over here will put the details, everything. I'm ready to help you, being that you're part of the room or you're not part of the room. Trading Sim is an amazing tool that we're using. Every of my mentors. So if you want to become a mentor students at JTraderco, you have to have Tradingsim because it's going to be one of the first homework that you need to do. And for the rest, see you in New York.
All right, brother. Safe travels.
Thank you.